To look at what moved the market today, we're joined now by Julia Lee from Bell Direct. Good afternoon to you, Julia. Well, we saw a rotation back into those good old defensives today, didn't we?
Nina, I guess it's just a sign that the market is starting to get a little bit nervous around the 4,800 point level, that we did see a rotation back into defensive sectors today. Now, we've seen the market moving towards that 4,800 point level, and I guess that's the next test for the market. If we see the market hit that point and then bounce back down, it is a bearish signal. While if we see the market move past that point, we could see a rise to 5,200 points before the end of the year. At the moment, it does look like there's a bit of nervousness because there's some major data to be released before the end of the week in the US. Now, overnight, we did see a negative lead by the US, and this is quite significant because we've now seen the Dow down 5 out of the last 6 sessions. But we saw commodity prices increase, and that initially gave the Australian market a boost, but in the end, that wasn't enough. In fact, after lunchtime, we saw the losses on the Australian market accelerate, and in the end, the ASX 200 finishing just above that 4,700 point level. As I mentioned, we saw a rotation out of those cyclical stocks back into the defensives. So the worst sectors on our market today were those growth sectors, so the consumer discretionary, information technology and financial, while the best were telecom, utilities as well as the healthcare sector.
Julia, you mentioned about that data that's coming out of the US tomorrow. Can you tell us a bit more about it, and why is it making investors so cautious?
I guess investors are cautious because there are a number of big economic pieces of information to come through to the market this week. Now, I've already seen out of Japan the Tankan survey, and that was a little bit better than expected in terms of manufacturers' outlook. But if we have a look at business investment, that actually came in worse than expected. The market in the third quarter was expecting to see a fall of 9%, and instead we saw a fall of almost 11%, and that really helped the Japanese market down lower today. Friday will be the big one. Out of the US, we see the non-farm payroll numbers, and we are expecting to see the non-farm payroll numbers improve in the September numbers compared to August. We're expecting to see a loss of 180,000 jobs, but that would see the unemployment rate in the US rise to 9.8%. So a little bit of nervousness ahead of that result, and I guess it's going to be a big week in terms of economic data before in Australia next week we see the Reserve Bank meet on interest rates.
Yeah, it's going to be interesting to see what they decide to do, that's for sure. And let's finish off, Julia, talking about Macquarie. Shares down today despite that big acquisition that was announced.
This isn't unexpected. When a company makes a big acquisition, usually they make an acquisition at a premium, and therefore its actual share price moves downwards because of the added risk. And that's really what we saw with Macquarie Group shares today. Its shares ending down 1.7%. That's after its acquisition of Fox Pitt, which it made for $130 million. It will also be taking off on just over $16.5 million worth of debt as well. Now, this is in line with Macquarie's strategy. It's trying to diversify away from its traditional strategy of large debt buying assets into more the traditional investment banking model. So this is going to help it to increase its exposure in the US as well as the UK. But it's been bad news for its share price. But if we have a look at Macquarie's share price for 2009, it's been a pretty good rise so far, 100% in 2009 so far. So I don't think investors will be too upset that it fell 1.7% today.
Yeah, it's done okay recently, that's for sure. Thanks for your time this afternoon, Julia, and we'll chat with you again tomorrow.
Thanks, Nina.